Hello and welcome to this CNBC Africa special. My name is Tesi Kaven. The first day of this year's GSMA Thrive Africa virtual event started with keynote addresses from heavyweights in the tech industry. In his address, head of GSMA in Sub-Saharan Africa, Akiwale Goodluck, stressed the importance of technology in Africa's recovery strategy from the adverse effects of the global pandemic.
COVID-19 has cast an unprecedented spotlight on digital connectivity. Innovation leveraging technology remains a key factor in our ability to recover as quickly as possible. Promoting a safe society necessitates limiting contact in high-risk touch points, such as the use of cash and convening large events and meetings. Mobile money is accelerating a cashless society, and the region has embraced digital events and meetings enabled through MNO's new generation networks that offer fast and reliable internet connectivity. The main challenge we continue to face is bridging the digital gap and the task of leaving no one behind, particularly on the journey to economic recovery in the region. The GSMA Mobile Economy Report for Sub-Saharan Africa 2020 states that nearly 800 million citizens remain unconnected to the internet. It is critical to close this digital divide.
Now, this year's event has drawn different leaders from CEOs, tech startups, and innovators, as well as policymakers. And while it is easy to lead in good times, what does it really take to lead in a crisis? Matt Grandridge, the GSMA Director General, spoke on tech leadership in times of change.
While the near-term focus is still to increase 4G uptake in Sub-Saharan Africa, this year 5G networks have been launched in South Africa, and a number of 5G trials have taken place, including in Gabon, Kenya, Nigeria, and Uganda. On the agenda also is responsible and ethical leadership. In 2016 at the MWC in Barcelona, the mobile industry was the first to fully commit to the 17 UN Sustainable Development Goals, the 17 SDGs. And the mobile industry has enabled fundamental shifts in tackling challenges in equality, diversity, gender, health, and financial inclusion. Let's connect, listen, and learn to ensure that mobile continues to be the great enabler across Sub-Saharan Africa, currently generating some 9% of GDP and supporting some 3.8 million jobs. That our collaborative leadership continues to drive digital inclusion. That governments prioritize digital strategies so that all citizens are connected and informed, leaving no one behind.
Later on in the event, Mastercard had a special session dubbed Africa Forward, the Mastercard Digital Summit. The global pandemic has revealed the crucial value of connectivity and shown us how vital access to fast and reliable internet is to businesses and individuals. Now, though the mobile industry in Sub-Saharan Africa has risen to the challenge of keeping everyone connected during these uncertain times, much more still needs to be done to increase internet penetration, with GSMA intelligence revealing that only 28% of Africa's 1.3 billion citizens currently subscribe to mobile internet, compared to the global average of 48%. Now, just how can inclusive growth be accelerated in Africa? This is what Rajav Prasad, the Mastercard Division President in Sub-Saharan Africa, had to say.
From the smallest businesses to the biggest corporations, from governments to NGOs, and from older generations to today's youth. If all players in the ecosystem embrace their role as positive enablers of the continent's growth, together we can drive Africa's digital transformation and create a digital economy that works for everyone, everywhere.
According to data from Global Findex, 1.7 billion adults were unbanked without an account at financial institutions or through a mobile money provider in 2017. Now, though these numbers have come down, many people across Africa still do not have access to bank accounts and digital payments. How then will these people benefit from the digital economy? Prasad tells us more.
Being locked out of the formal economy with no access to basic bank accounts or digital payments means being disconnected from financial services like credit, loans, and insurance, which can drastically improve lives. But technology is changing this landscape. Mobile money, for example, has transformed the payments landscape, with almost half of all mobile money activity worldwide happening in sub-Saharan Africa. Innovation and locally relevant solutions are helping us achieve things previous generations could only dream of. The challenge in Africa, of course, is how do you scale efficiently and at reasonable cost. We have built technologies like Mastercard QR that allow us to partner with mobile network operators, leverage their customer base and their reach to advance inclusive growth. This technology offers the advantage of ease of access, convenience, and safety for consumers, while providing merchants with a low-cost solution and very easy implementation to accept digital payments.
More than talking about the digital divide, different players have come up with various products to bridge this gap and pave way for individuals to access financial and other services that can prove to be life-changing in more ways than one.
Access to the internet is critical for connecting people to the resources they need in an increasingly digital world, with smartphones being the primary device to enable this access. But while the number of mobile subscriptions is forecast to reach 623 million by 2025 in sub-Saharan Africa, only 39% have access to smartphones today. Most people can't afford to purchase smartphones outright, and lenders can't extend credit without historical data, leaving behind the poorest communities and hindering economic growth. Mastercard Pay On Demand connects mobile network operators, lenders, merchants and consumers to close the digital and financial divide. The platform enables consumers and small merchants to get smartphones via affordable installments or pay-as-you-go plans, automating repayments through a Mastercard virtual card on a mobile money account. For lenders, it integrates the remote locking of handsets in case of default, making device financing more scalable. Further, based on the repayment patterns, consumers and small merchants build a credit history, opening up access to additional financial services.
As the third industrial revolution morphs into the fourth industrial revolution with the Internet of Things at its core, artificial intelligence has emerged as the next technological frontier of sustainable development. The existing lack of broadband connectivity across many countries in sub-Saharan Africa means that the uptake, adoption, and development of artificial intelligence and other technologies will continue to be uneven. However, Mastercard's Jorn Lambert views digital revolution as the great equalizer.
Yeah, we view digital evolution or revolution as the great equalizer. And the reason why we say that is because if you've learned anything during this pandemic is that it really doesn't matter where you are in the world as long as you have a data connection, to be honest. And as in Africa, millions and tens of millions of connected devices are being deployed, all of these people now have access to information and education. And people think about entertainment and TikTok and what have you, but it's actually really two things that, in our view, will lead to that higher level of equality. One is deployment of digital ID, so that people actually have an identity that allows them to get access to health services, to educational services, to social benefits. And secondly, what we call digital inclusion, so basically providing people with access to transaction services, electronic transactions. And the reason why that's important is that as long as people are in a cash economy, they do not build a credit history. They don't build actually a financial history out there. But with electronic transactions, they can get access to credit. They could get access to microcredit, build a business, buy goods for their farm, and climb the social and economic ladder.
On driving innovation across organizations on the continent, Lambert says that it's not about building walls, but more about building bridges through partnerships.
I think many of us used to think about innovation as something that you want to do in a closed circle with your own IP and protect it with thick walls around you. I think the world has changed, and we now are in a place whereby nobody can innovate on their own. And it's not about building walls, it's about building bridges and working with partners, like in our case, telcos, fintechs, startups. And so having a culture of partnership, of co-creation, and within that, a long-term lens. So to us, it's really about having some clear principles and having some clear long-term objectives, finding partners that are sharing those same values, and then co-create with them to have the right consumer solutions out there that work for everybody.
Another exciting topic that was discussed at this year's GSMA Thrive Africa is the digital gig economy and its acceleration in Africa. According to statistics from McKinsey, 63% of the total labor force in Africa engage in some form of self-employment. But what exactly is a driving force behind the growing presence of the digital gig economy in Africa? Ngozi Megwa, the Senior Vice President of Digital Partnerships at Mastercard, tells us more.
These freelancers are motivated by the evolving social attitudes about sharing underutilized assets for profit and the cultural shift towards embracing a flexible work-life environment. The leading reasons for starting gig work in Kenya are flexibility and supplementary income. The drivers that keep workers in the gig economy are the ability to control personal schedules and having no cap on compensation. They generally stick to using only one online gig platform, which they choose for personal organization, the convenience of managing end-to-end tasks, ease of finding jobs, and seamless use.
According to research, only a fraction of gig work happens online as opposed to offline. This begs the question, does digital inclusion really matter in the gig economy?
Digital inclusion is crucial because it's a prime enabler of the gig economy, opening up to new communities and many others. It supports wider access to markets, it advances financial inclusion, and it also secures stability. The key is in enabling the right mechanisms so gig workers can have better connectivity, more affordable tools of the trade, and enhanced access to financial services to help them reach their goals. Digital gig platforms that offer sustainable solutions and value-added services to their gig workers can do this. They have the potential to provide a source of consistent work, centralized governance, and support, and this is very exciting for Africa's future. The number one tool to manage the gig work is your mobile phone. And of course, Kenya's high mobile phone penetration of 97.8% as of January 2019 helps to converge the personal and professional lives of gig workers. Over 80% of gig workers in Kenya use mobile phones to find gig work, schedule assignments, get paid, and manage income. It's therefore not surprising that gig workers can lose out on gig opportunities due to lack of connectivity and affordability.
Well, that's a wrap for this CNBC Africa special on GSMA Thrive Africa Virtual Summit. Until next time, from me, Tesi Kaven, it's goodbye.